Hi, I'm Scott Shellady here in London for Traders Exclusive. I'm again back this week, and again, I do like it to talk about what they ask me to talk about on the television, right? It's been a busy week. We had Trump in town, obviously, last week. We had NATO. We've got Russia. Oh, my word, there's just so many things that really are happening. But you know what? Isn't it funny how the markets have been surprisingly volatile less, right, or less volatile? We haven't really seen a lot of chopping and changing, but I think we're going to. We'll have to wait and see, I think, more towards the end of summer, going into the school year in the States. But right now, suspiciously quiet. So let's just talk. Trump in town, really talking a lot about Brexit. That's weighed heavily on the sterling, or at least the cable right here, dollar pound. That's broken that 130 level. That's been something that's been pretty interesting. We've also seen some better than expected, not really red hot, but better than expected economic news coming out of the States. We're expecting maybe next week a 4% GDP read. That's kind of built a base under that 10-year yield, and it's trying to trade higher. We're in the mid-280s right now. We've made a run at 290 as of late, but we kind of just slipped back here a little bit. So that's something to keep an eye on. Also, I think that keeping an eye on the relationship between that 10-year yield and the 2-year, because the 2s-10s spread here is what everybody's worried about, right? If we're going to see the 2s go over the 10s. Right now, it's 25 basis points-ish. What do I think about that? I think that, we've had the Federal Reserve so involved with monetary policy that I think that maybe that historical relationship has probably been skewed or distorted a little bit, so we can't really hold that as a canary in the coal mine like we used to, but it's still something that we have to keep an eye on. We're going to see Donald Trump try to get out of his Russian situation and what he had to say while he was in Helsinki. Ultimately, though, the markets don't expect anything from him. And the markets really haven't been reacting to Donald Trump. We've really been kind of trying to take a wait and see. In the UK, we've got to hurry up and wait and see when it comes to the currency and what's going to happen with Brexit. In the States, it's a little bit more softly waiting and see, because we have to see what happens with the tariffs and what might happen with China, because everybody's kind of worried about a global slowdown. And that's why I think we can't, even though we're building a base when it comes to that 10-year yield, I don't think we're going to really see it rip higher, because we have to wait and see, hurry up and wait and see what's going to happen with any signs of a global slowdown with the tariff tantrum that we're having with the U.S. is having with basically everybody else. So that'll be something to keep an eye on. So we've got really some global macro things, maybe some internal things. Internally, we want to see what this read's going to be with a 4% GDP. If we get that, that'll be great. But it's still not red hot. We're seeing no massive wage inflation sneak through, which is a little bit disconcerting. And then we've also got to worry about what might be happening globally with this potential slowdown with these tariff tantrums. So all those things we have to watch, affecting everything really. But we've got that dollar, surprisingly enough, at a yearly high here, just over that 95 level on the DXY. If you follow that, that's going to also be something that we're going to have to keep an eye on. So tons out there. It's changing by the minute. We'll see what happens next week, but it's going to be interesting to see what happens with this 10-year yield and how strong this dollar can get. I'm Scott Shellady here for Traders Exclusive. I'll see you again next week.